Hi, I'm Sherry Ajluni, and we're going to talk about inflation today. The Consumer Price Index was up about 6.8% last year, continues to rise this year, and housing prices aren't even included in that number. Housing prices were up about 20% last year. They're expected to rise in many of our zip codes in the Atlanta area that much again this year. Nationally, they may be saying more like 5 or 6%, but go look at Zillow and you can see that in many of our zip codes, they're expecting prices to rise. It'll say about 19%. We have people moving here. We have millennials moving from place to place. We also have construction costs that have risen and not enough new construction homes to meet the demand. We have labor increases, construction, building product increases, all of those things. Supply chain, everybody is talking about supply chain, right? So that's all going up, which makes our housing prices go up. So how do you hedge against inflation? You diversify. One of the ways you diversify is real estate. You have your money in stocks and bonds and other hard assets. You get it out of cash and into hard assets, and one of those is real estate. So the average price of a home in our area is $500,000. So let's say it started at $500,000 last year and ended the year at $600,000. Now you're looking at an additional $100,000 in net worth. If that same person had two smaller investment properties and each of those was up $50,000, they're sitting on another $100,000, so they're up $200,000 last year in net worth. If they have no investment properties, all their money was in the stock market last year, they're probably down, unless they did some really good investing, and then I'd like to talk to you because I did not do so well. The other advantage of holding investment properties is that they work for you. So they're cash flowing for you. Someone else is paying down your mortgage. You have a tax savings and rents keep increasing. So you can keep increasing the rent generally on the person that is renting your home. You are making money in more than one way. So let's say you put $25,000 into a rental home, you put $25,000 down when you bought it, and it's up now $50,000, plus you're cash flowing on it, and it's probably gonna be up another $50,000 this year, sitting pretty good on your rental properties, and you're paying less in taxes, which is the ultimate goal. So I keep hearing people saying they're gonna just get out of the market now. They're gonna get out of the real estate market. They aren't in investment properties. They just have their primary residence. They think prices are high, so we're gonna go ahead and sell, and maybe we'll rent for a while, and then we'll come back into the market when it calms down. So by the time you decide to get back into the market, the price of the home that you wanna buy is probably up. You've made no money on any asset that you're sitting on because you don't have one. You're paying someone else's mortgage, you're paying rent. You don't have a tax write-off while you're paying that rent. And interest rates are now gonna be higher when you go back into the market. That doesn't sound smart to me. So let's say you get really frustrated and someone goes, all right, forget it. I'm just gonna go buy an RV and we're gonna live in that and just travel the country. Okay, great. So now you've purchased a depreciating asset, which is probably pulled by another depreciating asset, your truck or SUV. I know, you love your truck or SUV, I do too, but it's still a depreciating asset. And you're driving it around the country and you're looking at all these great places, but you have to stay somewhere at night. So I looked it up because I'm not an RV person. The average price, and this is a basic RV park, is about $50 a night or $1,500 a month in rent. So that's the price of an average apartment here in North Atlanta. You could have an apartment or you could do an RV. Okay, well the RV might be more exciting for a while. I don't know if I could handle a big family in an RV, 3 kids and a dog driving around the country. Might be a little crazy, but I know people like it. So, but that's what you're gonna spend on it. So you're gonna spend the money on the RV, which is gonna depreciate. You're going to spend the money on the rent or lot rent, wherever you're parking it. Unless you can park it for free, You're still spending the money on the RV and the truck, and you have all those same obstacles that I just talked about when you go back into the market. Would your financial advisor tell you to get out of the stock market when it's going up? I know Dan would not tell us to go out of the stock market. In fact, even last year when it was going down, he told us don't get out of the stock market. Move things around. Again, diversify, but don't get out. I'll be happy to sit down and talk to you. There are always financial reasons that some people do get out of the market and feel like it's good for them. And I may agree and tell you, okay, yes, it's less stress for your family right now to go and rent. So do that for a while. There are always those reasons. But in general right now, I'm saying stay in the market. Even if you can, buy an investment property. I'm telling you, we did that. We put our money where our mouth is. And Rick and I bought an investment property last year. It'll be down at 30A along the beach. We will be renting it out. We would love to welcome you down there. Can't wait to see you. And we're hoping that that also is a good hedge against inflation for us. That's my advice for you for today. Don't get out of the market. Stay in. Follow our YouTube channel. I'll keep you updated every month, every quarter. We always let you know what's going on. We're always going to give you honest advice, and I follow this closely. You can also call me anytime. Take care. Have a great day.